Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
Drew, Meredith, how you doing?
Very well. Good to be here.
Did you know that Meredith is a place in Victoria?
Yes.
Is that named after you?
The Meredith Music Festival, Meredith Goat's Cheese, probably two of the best Meredith-related events in Victoria and Australia, maybe.
So you're saying that you are not the heir to the goat's cheese?
I am not the heir to the goat's cheese.
Could you explain why I don't get any goat's cheese? I just get free financial advice every time I come in.
General advice only.
Very personal advice. No goat's cheese.
I believe you got a bit of a bee in your bonnet this week.
Bit of a bee in my bonnet. About the whole Billionaires Club?
Yeah, the Billionaires Club.
Okay. You can't look at the TV. So just for anyone that's watching on YouTube, you just immediately look at the thing. We do have a TV that we look at that's off the camera. So I'm going to ask you, who is Australia's fourth richest person, according to Forbes?
The founder of Xero.
That's Roger Reid. He's from New Zealand.
No. Fourth richest person. It's not Double Bay. I mean, Mike Cannon-Brooks.
It is.
What a guess.
Yeah, Double Bay Jesus.
Double Bay Jesus. Yeah. Coined by, I believe, Joe Aston.
Joe Aston. Yeah, you'll be sitting in that seat soon. So in order, we got Gina Reinhardt at 30 billion, Twiggy Andrew Forrest at 21. It says and family. And family. Harry Triggerbooth at 16. He's Meriton.
Metricon.
Let's have a look. What is it actually? Something about China. I can't see.
Meriton Group, you're right.
Yeah, Meriton. Yeah, there's some big skyscrapers around. Mike Cannon-Brooks.
A lot on the Gold Coast.
He's only 44. He's got 13.7 billion. This is all according to Forbes, by the way. Scott Farquhar, he's co-founder of Atlassian.
How did he get an extra 0.2 billion?
I always think that, when there's like co-founders, like how does one get a little bit more? Maybe Scott traded it for some pizza back in the day. And Anthony Pratt and family, that's the Vizzy family. Melly Perkins and Cliff Obrecht, I think that's how you pronounce it, from Canva. They're together on the list, which is kind of cool.
Yeah, what's the
more Reinhardts?
Everyone, we've been through this a few times, and the average age is like 87 of the billionaires.
Really?
And the vast majority, as you go through there, it's just starting to change very slowly, but the vast majority has been out of people making money out of property.
Your mate Jezza Harvey, down at 28. 1.9
open his first store in Birmingham this week. Yeah,
that's where Peaky Blinders is from.
Reading a little article about that during the week.
Or vice versa. Solomon Lew, ASX listed Premier Investments, 2.3 billion. Ainsworth Gaming Technology / Aristocrat.
Sold to Aristocrat. Yeah.
Yeah. Who else is on here from ASX listed? Vicinity Centres.
Jack Cohen.
John Gandel. Clive Palmer. Another Matty Yours. And Richard White, who's been in the news lately. Richard has appeared on the show recently. WiseTech. WiseTech Global.
Yes.
Been in the news lately, Drew.
Yes, it's been a little bit. I mean, it's very rare that we're looking at things other than earnings reports, but this week we've had two really big news stories from two of Australia's biggest companies, probably top 20, top 50 biggest companies.
Yeah. So Richard White is the founder and CEO of WiseTech. And there have been, this is a headline I'm reading from the Daily Telegraph, easily the most reliable source of information.
Global shipping technology.
Yeah. So WiseTech creates something called CargoWise One, which is, this is the Daily Telegraph saying this to us. This is infecting our brains as far as I'm aware. But it says, White scandal triggers WiseTech share plunge. That was 2 days ago. Shares are down 1.9% today. I mean,
that's always the headline.
Yeah, and then it's like
$2 trillion wiped out.
Yeah,
market fall 0.4%.
Just absolutely. I'm. This is the reason why I wanted. This is my bee in my bonnet. Is I'm just sick of all the shit that comes up with you can literally look through that Forbes rich list and tell me one of those people that the media actually likes.
Double Bay Jesus.
They don't even like Double Way Jesus.
Oh, they've been, yeah.
They compare him to Jesus because they think he's too altruistic. So they've gone, man, you're too good. We're going to make you seem like you're a cult leader.
Well, there is a bit tall. I mean, Australia's always been known for this kind of tall poppy. I think you've talked about it before, the entrepreneurial spirit in the US.
Yeah, it's totally different.
They recover from everything, and it's kind of the success of people, whether it's NBA season starts today, but going, from nowhere to being, in the NBA, to business and the startup culture in the US, that it does seem more entrepreneurial and less, chop them off when they get too big.
Well, it does seem like that. And it's fair to say that the Richard Wyatt, from what I could tell, a lot of the news, quote unquote, that's coming out about Richard is from one publication. So keep that in mind too. One news source. I have no bias, like I don't own shares. That's not my thing. But what I am sick of is just how much we shoot down entrepreneurs in this country. But I would say of that list of like the top 20 that I can see there, I would say maybe Melanie Perkins of Canva and Cliff are probably the only two that haven't experienced that from that list.
It probably helps that they're still a private company too.
And they create something that really no one can be angry about.
And it's a very fine line too. Like there's things that you need to identify and address, like you interview Shapiro and you'll interview Aston. Sometimes there are things that need to be addressed, but there's also clickbait.
Yeah.
And we write publications all the time, and we're very clear on not being clickbait, even if it's just a title, not even the content that's within it. Sometimes it's just the title and it's the same old content written into it.
Yeah. And I just think of course, everyone should be held to account. That's why we have the courts to deal with that. But realistically, I can't expect Gina to behave exactly the same way that I'm going to behave, the same way that you're going to behave. Whether or not they have $1 billion or not doesn't make it different. And I think we have these sayings like money is the root of all evil, and then so people think that having money and aspiring for money is a bad thing. And then literally all of the Wall Street movies
about greed
and badness. Like, why can't there be
boiler rooms?
Something that I invested in this thing and it worked out really well. I got filthy rich, right? That's what they say. And it did good for the environment,
we all
right?
like drama.
I just think and it's going to hold Australia back in the long term. And it's really sad. I'm not saying there's another one here on this list down the bottom here, Drew. Chris Ellison is in the news now from Min Resource.
Bill.
Yeah, well, he's only got $1 billion. Tough him out.
No, he's only just over $1 billion too.
Chuck him a bone. Yeah. But my point is that it doesn't make a difference whether you have $1 billion or $10. Everyone is just a human at the end of the day, and what we should be trying to focus on is also the positives as well as the negatives.
Yeah.
Just because someone has money does not make them inherently bad or good. That's another thing that really, speaking of bonnets, really gives me the shits is we put people on a list of most successful, like quote, most successful, Drew. Just because you have money does not mean you're successful. Doesn't mean you're a good person. Doesn't mean you're a bad person either. That's my point. Anyway, B on the bonnet, that's been scratched. What else is making
scratching a bee?
I'm probably just stirring up a storm.
It was you had WiseTech, and obviously we also don't know exactly the machinations of it. They had MinRes has been in the news as well.
That was a little bit different though.
Historical tax schemes. I'm not going to try and comment on it because it sounds incredibly complicated, and they're the things that you want kind of called out and identified. But MinRes has had its own struggles anyway. It's a company that mines lithium and iron ore. Great Australian success story over a long period of time. But it's also one that's been facing its own challenges, let alone what's come on top of it now. And then immediately it'll be that this latest issue is what's driving the share price lower. But these are all kind of short-term blips in a broader ocean.
I think that the difference is that if you have a public company, things tend to be more public.
Yeah, and you feel personal.
Even if it's a personal issue.
And a fund manager. There's plenty of examples where problems within or the personalities within fund managers have ended up, losing with the market and investors losing confidence in them as well.
It's actually, and maybe I'm a bit more, I guess, I don't know what the right phrase is, but maybe I'm a bit more empathetic of this because I started Rask with my surname literally on it. And the reason I did that is because I wanted people to know that if something was going wrong, that they could point me out and say, you stop that now.
Yeah.
And I would stop it. That's the difference that finance hasn't had. That's a double-edged sword, because if we're successful in 5 years from now, people are going to be like, oh, you stop that. And then I'm going to be the bad guy.
1.05 billion.
Yeah. Yeah, maybe I'll be on this list. Imagine. That would be a joke. If I'm added onto any list, probably the most wanted list, probably more.
So I got bad news for you too. The market's not going to help you get there.
Why is that?
So according to research this week from Goldman Sachs, the S&P 500 is expected to return on its own only 3% per annum over the next decade.
Really?
And that would be, if inflation is 2%, it's only 1% after inflation.
That's a lot of calculation.
That's true. It's just returned 93% over the last 5 years, but a strategist at Goldman Sachs is saying, and this seems to come up all the time when you're near all-time highs.
Decade.
Yeah. Like the lost decade refers to what happened in Japan, the Nikkei, from I think it was the late 70s through to the 80s. With I think there was an inflationary crisis, all kinds of the Japanese property bubble exploded. And it seems like every time the market gets near an all-time high, we start talking about lost decades. And in some cases, the thing about these is just because the market itself may not, even if the weather's true or not, we've got another problem because people are just getting headlines because they're saying the market will go nowhere. But even in these environments, there's ways that you can generate a better than market return, which is what we talk about all the time.
All right. So I'm going to put you head to head with the biggest honcho that Goldman Sachs has to offer. What do you think the S&P 500 will return over the next 10 years?
You going to Hey Siri this?
I'd need to, but I don't want... Yeah, go on.
Between 7 and 9%.
7 and 9%. That you're flying in the face. So... Wow. So you're saying 7 or 9%. Dr. Andrew Dermuth is coming out with... And this is noise.
What's the 30-year average return from the S&P 500?
Don't know.
I'll check that out.
Monet, can you cue the noise? Got a little drum roll there.
It's actually below average. So I'm predicting below average returns. So the S&P 500 has returned 10.7% over the last 30 years, and I'm suggesting it's more like 7 to 9.
So if anything, you're being conservative.
Exactly.
Yeah. How much stock do you place in these types of things?
None. I think it's something to consider, though. Like, you have to be thinking about it. And if you're in, this is where, I mean, there's two kind of things that come out of it. One is the importance of diversification, because there is a risk. Australia probably more prone to zero return. So it took us 15 years to reach our all-time high, whereas the S&P 500, I think, must have hit like 200 all-time highs between us hitting ours. It's the importance of diversification that comes out of this, but also that, and we've talked about all the time, that active and passive. So index, the risk of an index is you get the average, and if this guy's right, you're going to get 1% per annum after inflation for the next 10 years, which means you probably need, it could be using indexes, but in small caps or in value or in different sectors or in different countries. So it just kind of reiterates the importance of having that kind of framework and philosophy within your investment approach, because this does happen. I'm not saying it's not going to happen, and yeah, it's fun to joke about it, but it is a real risk of investing.
It's interesting, isn't it? It's kind of like even he could be right? He could be right. And we don't know.
He would have moved on by the time he was right.
He's probably retired with all these calls. But even if you chose the unhedged version of that, you might have a totally different return over 10 years. Like, depending on where the currency goes for Australian investors, like I think he's just talking about just US perspective. Yeah. And that could have a drastically different result. You know what I think this is kind of like all of these types of things? I think of like a sieve, and you know how you can put like flour in it, and you put the flour and you just hold the sieve still. All the flour sits there. It doesn't fall through the sieve. It's only when you start to shake it that the little bits fall out. I think that's like the stock market over the long term, in that over the long term, what eventually stays in there, in the top of the sieve, is the return, is the earnings, is the profitability. Those things stay. All the other stuff, the noise falls through and it's gone.
I think that's one of the best
really
explanations, anecdote. I'm not even sure.
Analogies.
Sorry.
Yeah. Metaphor.
Metaphor. Irony.
Words. Zeitgeist. There's a lot of words we can throw out there. But ultimately, that's what it is. Because like over the long term, you're basically just sifting the companies that are going to keep growing to the top.
Yeah.
And we may or may not have that be the case, but I think maybe an alternative way to think about this guy's view is you still have US, like you said, you just cut it up differently. Active, passive, small cap, large cap. Maybe it's equal weight instead of market cap. And we have all those different vehicles available to us here in Australia. What else has been on your plate this week, Drew?
There was stamp duty changes came. They're not
Victoria.
Victorian stamp duty. So
right.
I know I was looking at a few episodes of the property podcast as well, and talking about how money was just flocking everywhere else. It wasn't much relief though. So for everyone, if you don't know, Victorians have had jumps in things like land tax, and there's real struggles in affordability and new apartments coming to market, and people wanting to buy new apartments at prices that are probably where they were 3 years ago. So there was a little bit of stamp duty relief that came out of that, but not particularly broad, and still not necessarily helping the Victorian property market, which continues at, I think it's up 10% since the pandemic, where there was numbers that Perth and Brisbane are up something like 40 to 50% in 4 years.
Yeah, be about right. They're up. Perth was up like 24% last year.
Significantly.
Yeah, it's wild.
We had uranium go crazy.
Uranium.
Yeah.
Talk to us about this.
I'm pretty sure it was one of the Amazon directors, or was it one of the founders that was talking about he was interested in building his own small-scale nuclear reactor.
Oh, I did hear news
the
like
data
this.
centers.
Yeah.
And it just popped. Uranium is kind of, we talk about clean energy and using the sun, and now we're going to build little nuclear reactors all around the city.
Jamie was talking to me about that. Jamie, as in your business partner, Jamie Nemsis.
He's pretty,
shout out to Jamie.
Yeah.
He was talking about going when he went to Harvard not too long ago, not to study, just more to tour. He was talking about there was someone that won is in the running for a Nobel Prize or something that was talking about mini fusion reactors.
Yeah. I mean, it seems like we do it a lot easier than splitting atoms to create energy.
Oh, yeah.
But, I mean, it's been one of the hottest parts of the share market in the last 12 months.
Hottest parts, interesting.
Yeah.
I feel like people that own uranium are kind of like the desperados that are just like out there just like, come on, something. It makes sense. And everyone else is like, yeah, maybe. And it just kind of never takes off.
I mean, it's like most uranium is, to my understanding, is used. Old missiles are being, uranium's been taken out to be used in nuclear plants. And it just, a lot of the biggest beneficiaries of it aren't even mining or producing it at the moment. They're more fluctuating on the price. It just remained, I think, and this is what we see, the trends that come out and pop up. Lithium, it was 3 or 4 years ago, and lithium price fell 90%. I've been burnt by uranium in...
No, you don't want to get too close to it.
Probably at least 10 years ago, where a company was producing, and then all of a sudden Fukushima.
Is it
happened.
Paladin?
Yeah, it was Paladin.
Okay, of course.
Yeah,
I think everyone has a story with Paladin. But that's, that, and then Rio Tinto got on the hook for that some or other with that, didn't they?
I got an interesting stat for you.
But look at this, just quickly, on uranium, 2001, it was priced at $10 a pound. This is US. Went up to 134 in 2007. It looks like there was a financial crisis in uranium.
That's when we bought it.
Yeah. Then it fell. Within 3 years, it was back down to 82, so there goes 50%. Continued to fall until 2016 to, what is that there?
25.
$7
$7
a pound. And now it's back up to...
What isotope is that?
230 something.
Okay.
No, I don't know. It's a periodic table. I don't even know. It's been science a long time. Go on. What was the other thing?
I've been having a lot of conversations this week. And how much do you think the interest repayments would be on a $1.6 million mortgage that it basically cost to buy the average house in Australia now, in Victoria?
13,000.
Yeah, pretty close.
Yeah.
Per month.
Yeah.
Yeah.
Yeah. Single income family. Think about that for a moment.
What's 13 times 30? Is that 150
odd?
Yeah. That is terrifying.
Imagine.
Like 1.5 million in mortgage.
Yeah.
Think that's $10,000 a month. That's easy to calculate that way. $120,000. That means you have to have generated double that in after-tax, in before-tax money to service a mortgage.
Thank you to the few thousand people that did our survey this week. We can actually respond to this with some interesting data. So, Drew, you can see on the screen here that
daily.
Yeah. Well, squint. The average Rask family brings in, this is, who cares if it's before or after tax? I don't know. It was $167,000.
Yeah. So the mortgage on a $1.5 million.
90% of their income. Yep. But that leaves them about $13,000 for tax per year, and then nothing for mainland. Food. You're gonna have to give them some of your cheese, bro. So
shout out to Meredith Dairy if you can send some that beautiful goat's cheese down.
But the average, I think this was ABS data from 2019. For average household income in Australia, it was about 110,000.
Yeah,
which is still a lot of money. But if you think about that, like the average, I'm assuming that people in the Rask community are investors, have good careers, investing, have money, these types of things. If you think about that, really, not even us in our community would be able to afford something like that.
No, and just reflective of how important interest rate changes are going to be, and why it seems, or why we talk about it all the time, that interest rate cuts are coming at some point. But we're stuck in this period at the moment where retirees and people with capital are getting higher income, but people with mortgages or anyone that bought in the last few years, it's above average, of course. But they're, even smaller, like a $500,000 mortgage isn't going to be particularly cheap to service either. It's very impactful, and it's impacting on lifestyle at the same time. And then we had the IMF come out and said Australia still has the second highest inflation of 42 countries surveyed from around the world.
Crazy. We do it well here in Australia.
We do inflation well. We do interest rates well.
Yeah.
We do
stock market's pretty
stock
good.
Market highs.
Yeah. Got some good mineral resources as well.
Good.
Just coming back to that mortgage thing, it is bananas when you think about that. Like, it's actually wild. So I don't know if I told you this. I was thinking of moving down to the Mornington Peninsula. Then I realized what interest rates were. And I was like, I was not doing that. But I was looking at houses. We looked at one house. This is going to sound like a lot of money to a lot of people, but just know that we didn't buy it. So it went on the market for 2.9 million before interest rate changes, right?
In this 2020.
This was an investment property for someone.
Yeah.
Right? They never lived there because they couldn't afford to live in it.
Sorrento, Blackberry.
Not even that far down. It was like the top of the peninsula.
Yeah. Oh, Mount Martha.
Not even.
Mount Martha.
Think inland. Think not beach views.
Balnarring.
Yeah. Not even.
Yeah. All right.
Keep going down the list, bro. Anyway, but you'll get there in 5 minutes.
That's Cerberus.
It's the actual it's the submarine that they keep in Western Port Bay. That would probably be worth a pretty penny. But anyway, aside from random military facts, this house went on the market for 2.9. It went through 4 real estate agents, and by the time we inspected it, they were like, "Come on, just
you
make
inspected
it." Yeah, because by the time we got to it, they were pricing it around 1.5 million.
1.5.
So they dropped
half.
Yes, and they still couldn't sell it.
Oh my god!
Crazy.
It is
because you
but that is a lifestyle property.
That was 3 acres. This house was big enough that I won't give away too much of the details, but they had one of those simulated golf driving ranges in it. Because
in the garage.
This was in one of the living rooms.
Oh, okay.
So this is like ridiculous. We went to it because we were at another house and the real estate agent was like, "Would you come take a look at this one?" And we're like, "Oh, we'll come." Never be able to afford it. We just went and had a look anyway. But that gave us an idea like that how expensive and how unaffordable those houses were in that mid to upper range. Obviously, we didn't buy it, so full disclosure on that. We just stayed put.
I mean, it's why more and more people are renting, but then renting is just as challenging because rents are going up, but at the same time, you're hearing investment property owners struggling with interest payments, and their rent isn't enough to pay for their interest. So, like we kind of blame property owners, we blame homeowners, we blame renters, we blame the government, but essentially, everyone's subject to some sort of pressure or stress on the other side. So,
my mum calls Scott Pape.
Pape.
So
Pape came bought out the house, didn't he?
Like last week. I love his email. It's like the one email that I read. He came out last week and said, obviously, the experiment of pushing people, allowing the private sector to provide housing has not worked.
Yeah.
And I think he hit the nail on the head. Like he was talking about it from a youth homelessness perspective, which is just outrageously high in Australia for the best country in the world. We have so much youth homelessness. It is wild. It hasn't worked. The government does need to start building houses. Even if it costs money, They need to social house. They need to start doing stuff.
But what about the debt?
Because those people can't vote for themselves. They can't speak up for themselves. And so, what debt? You're talking about government debt?
How are we going to fund it? How do we fund it?
Who gives a shit about government debt? Honestly, it's fake money. Just ask Bill Mitchell. It's just money that goes, it's ones and zeros. Who
Exactly.
cares?
It's just another 100 billion on the RBA machine.
But honestly, like, just create something that gets those vulnerable people some housing, like disability housing, all that sort of, all those lobbyists that, anyway, build the freaking houses, support those people because they need it. We have a lot of questions. The most questions we've had for
quite
months.
a while. People listening again.
Yeah.
I'm not sure about that.
There was one person last week, there's two this week.
I got a little bit of B in my bonnet too.
Oh, do you?
Yeah. And this is one of the issues of being, I believe I'm Gen Y. I think I fit in there just. I'm eyeing on to that. I'm sure Mon will correct me if I'm not. But we're in the generation where we started with tape players, then moved to Discmans, so Walkmans, to Discmans, to MP3s.
Oh, yeah.
There was those little things we had for a while, mini.
Oh, yeah. Those things that go on they had like a little clip that go on. There's Monique laughing.
Yeah. Oh, the iPod Shuffle, we had all those things. And all this way through, like we were burning, tapes onto CDs and CDs onto MP3s, and then it's all rotating. Everything got more expensive. If
you were burning CDs and you were a billionaire, you would be raked over the coals for that.
Well, I was one of the big users of Napster, so here we go. And Lime.
What was Drew looking at in 1997? LimeWire, that went bust. Pirate Bay. Yep, go on.
Now, we've been through all that, and I'm probably not the lucky enough to have had vinyls beforehand, but now we're going all the way back to vinyls. So I've had to spend money on all these things, essentially throw them away, recycle them at Officeworks sometimes if you need to. Love West Farmers. And now I've got to spend all that same money again to buy $70 records that we should have just held from 20 years ago. That's the bee in my bonnet.
Okay, so we've come full circle. Well, the fashion's come full circle. So if you've kept your clothes
indeed
from the 1990s, it's coming back.
The 26 red, were they like the old baggy jeans?
Oh, yeah. I watched it, Tony Hawk, basically, whatever Tony Hawk's still wearing. Anyway, we did get some good questions this week. So if you did send in your questions, they are awesome, wonderful. We've even had a repeat offender this week who's just asked a follow-up question. We don't know your needs, goals, or objectives. So if you do take any of this information, just remember it's not personalized to you, your needs, goals, or objectives. That's where a financial planner comes in. We have some massive changes coming to the Rask network in the next 7 days. By the time you listen to this, it could be too late. You might have missed it. No, just kidding. There will be big changes to the way Rask operates in about 7 days. Everything's still amazing. It's getting better, but you will see some changes. On the website where you lodge your question, that will still be there. So the link in your podcast player will work. Or if you're on YouTube, there's a link that says ask a question. You can lodge a question that way, or you can lodge one through the free Rask community. Send them in because we love them. If we do reference ETFs, super funds, insurance, they have things called PDSs, product disclosure statements. They are available on the provider's website. Drew, the first question comes, financial planning. You can find out how to find a financial planner or get matched with a financial planner via your show notes as well. So the first question comes from I'm Not a Robot. It's interesting where it started. They say...
Thanks, ChatGPT.
They say... If the AI rocket ship starts spluttering because organizations start to more closely scrutinize the computing costs of creating large language models and AI features aren't causing consumers to stampede to AI versions of products, what impact do you see for the Magnificent Seven and world equity markets more broadly? What strategies could hedge against that impact? So I love it when someone puts a rocket ship.
Cans of beans.
Yeah, go back to the shotgun, grab the shotgun, grab the beans, head to the hills.
The survivalists.
No, but it's basically, it is a buzzword. I think it's overblown, to be honest. What do you think about AI broadly? Like, are we on trend? Are we in line? Is it going to meet expectations, or is this another cannabis blockchain type thing?
I feel like I'm an early adopter of like physical technology, but I'm still struggling to execute the AI technology in my personal life or in my business. I'm still struggling with it because it's still an add-in. It's not like it's just not part of what you do every day. There's obviously real risk, and we saw this in the latest reporting season as well, that like every business, all these groups, most particularly the Magnificent Seven, they have to invest ahead of time to prepare for what they expect to happen. So there is a risk that you get this kind of earnings hole, and we saw it during the pandemic as well, where everyone spent money early and then expectations increase, but they can never keep up with it. So I think there is a big risk of a hole, but it's just looking at across our businesses, across most parts of our life, the benefit and the productivity of adopting AI, in my view, is just it will force the widespread adoption over time. If you don't, you'll die. Not like businesses will just be quickly passed by. You'll become irrelevant incredibly quickly if you can't use AI to improve your customer experience. You can't use AI to improve the efficiency within the back offices and even the non-client facing parts of your business. I can't see it. I think it's going to be slower than what people may be priced in to some areas of the market, but I can't see it, falling apart.
Yeah, I don't think the Magnificent Sevens, the Tesla, Nvidia, maybe Nvidia, maybe a bit more susceptible.
Nvidia, Amazon,
Microsoft. I think they're all enablers of AI technology. I don't think they're necessarily going to lose if it doesn't come, because they're already awesome beforehand. I don't know why they would be worse if the buzz doesn't eventuate, but I don't know. I just feel like I think in this case, this person's asking specifically about types of companies that are using AI as like an additional product or tool that they can sell to their customers.
Which is literally everyone.
Yeah, so like one of the world's biggest website builders is a technology called Elementor. Elementor is not a publicly listed company, but what it does is it enables websites to be drag and drop.
Yeah.
And then they have this thing where you can like build it in one go. Or like imagine like Adobe having AI tools. And they might work for the most part, but are people willing to pay more just for that specific feature? I don't know for how long that's a thing.
Yeah.
Also, it's interesting because they mentioned the costs of creating these products. You got to remember that the costs ultimately are going to servers. So like Google GCP, Microsoft Azure, Amazon AWS, even some of those Chinese ones. So a lot of that infrastructure is where the
benefits to make sense.
Yeah. And I don't know if they would rather make money on the application layer rather than the infrastructure layer because it's more profitable. But I think that more realistically, I think they're going to win no matter what happens.
And I think a way to hedge this, Nick Griffin has said it incredibly well.
Munro.
Yeah. You want the picks and shovels. You don't want the people don't want the miner or the explorer. You want the people that are enabling it at different parts of the process. And that's what you get. What happens with all these teams is NVIDIA does incredibly well, but it's actually delivering something throughout that period. And there's heaps of companies that do incredibly well in share price, but never convert it into earnings. And that's what you want to avoid. And it's by understanding what the infrastructure like companies that are supporting this. And sometimes the company that was never, you don't even think about as infrastructure, but it becomes so important. Visa, MasterCard are examples of like the infrastructure to payment systems. So the way to hedge against it is making sure you're investing into the infrastructure type companies rather than the ones at the forefront or the ones that are, trying out these features, but have the risk of not seeing full adoption.
That's a good point. Yeah, there's a lot of, the John Addis book, how to win at investing by not losing. But anyway, great book. John was on the show recently. You saw it out there just in the common area. Interesting. He draws a really good distinction between what is a speculative investment and what is an actual investment. And he says that anything that relies on some future event happening is speculative. And so if you think about that as people that are investing in these AI or any type of companies, like all this garbage that people invest in, it is speculation because you're betting on something that hasn't happened yet. What you referenced was like NVIDIA. It's already making the chips. It's already designing them.
Yeah.
Like it's already doing those things. So it's going to rise and fall with that tide and probably accelerate, to be honest. So I think if you think of AI as a sponge cake, there are different layers. And the Mag 7 benefit every layer of that sponge cake. Whereas some of the technology companies are what we call application layer. So they're further up. They're like what the end consumer is using. They're like they
probably make bigger margins if it works.
If it works, it's like the gold rush you said.
It's like one or two take all.
Yeah, and those can work. But the reality is the further you go down, the more consistent things are. Interestingly though, a few years ago, like say 5 or 10 years ago, we would have said that Facebook was an application layer.
Yeah.
It was an app, right? We could say that Google was just an app. It was just a thing that you use for your browser. But now they are in that meat.
Infrastructure
Yeah,
asset.
they're further down.
Yeah.
Like Meta creating its AI tools for other people to use. These types of things, like that's pretty crazy. I don't think this is a big issue. Do you still own FANG?
Yes.
Global X, sponsor of the show.
As well.
FANG ETF, FYI.
How does FANG, I got a question the other day, how does FANG fit into a retiree's portfolio?
I was actually thinking about this exact thing this morning, to be honest. I don't know why. Maybe it's kindred spirits, but I actually was thinking about this. Like, how does it fit in?
For me, it's all about position sizing. So the companies within FANG are companies that they're actually within the S&P 500, the NASDAQ, all the major benchmarks at quite sizable levels anyway. But what we're trying to do, if you're building a portfolio for retirement, essentially you want a combination of income and growth rather than just growth. And we know that the volatility in FANG is going to be higher than the Dow or the S&P 500 just because it's less diversified. So for us, it's all about understanding the risk of it and sizing that appropriately within a more diversified portfolio. If you're young, you're contributing more money, you can probably go get away with 10 investments. And you can deal with the volatility that comes because you're investing more. But when you get to the other end and you've got a finite pool of capital, then it's more about positioning the sizing appropriately.
Good point.
So instead of having 10%, you might have 2 to 3%.
Yeah. I heard. Yeah. Good one. So to dividend or not to dividend writes in and says, if I already have a dividend reinvestment plan for my shares that offer it, and I'm in the accumulation phase, should I contribute the dividends from shares without a DRP to my super account as an after-tax contribution? This is a very personal advice-y type of question, so I'm going to generalize it. Dividend reinvestment plans, yeah, nah? Nah, okay. And then would you then, if you're in accumulation phase, would that be an automatic signal to put money into super?
It depends.
Okay, good to know.
The big question here is after-tax contributions, you want a tax deduction. Dividends, you're going to be getting franking credits on the back of likely as well. So it's very specific to your situation. And you only really want to be using after-tax concessional contributions if you're on the right tax rate.
Yeah, fair. Scam Bam, thank you, Rask, writes in and says, hey, Rascals, I was listening to the last podcast and you mentioned scams that we may have encountered. So I thought I would tell you about something I encountered. I was looking to buy a unit. I contacted the agent on domain/real estate, went back and forth about the property details. Then I requested an appointment to visit the home. He said that it is not built yet, but I can just sign the contract and he would get me to see a different unit which is kind of similar looking. It was a little shocking to me that he would expect me to sign a document like this and lock in my life savings. Imagine if someone wasn't more aware and signed it. Is this normal? Or is this normal practice? Or is this person dodgy? So what you've encountered is a off-the-plan apartment by the sounds of it, or an off-the-plan development.
Yeah, and it's not built yet.
Yeah, so it's
can sign the contract. Yeah.
So what they're trying to do is what they try and do.
Kind of similar looking. This is within an existing building, or they're taking you to a different building to review it.
Oh, I'm just getting the information from Scam Bam. Thank you, Rask.
I think
But this is common, that the builders get you to sign and they take your deposit, put it, fingers crossed, they put it in a trust account.
Yeah.
But they get enough people to sign to say that they will buy the building once it's built, because then they can go to the bank, get funding, build it, and then sell it to you.
Yeah.
That's what they try and do.
Rather than have their own money into it. Yeah.
But that always runs over time, over budget.
Particularly in the current market.
And I think there's sunset clauses on these things so that if you do put your money down, obviously we're wading into massive legal territory here, but you put your money down, there's typically a clause that says if it's not built within 2 years, you can renege.
Yeah.
Or something along those lines. So that's where the devil's in the detail. But this is quite common, Drew.
It is, yeah. And it's, I think, one of the areas they would always say, I think they have to say to get financial advice or legal advice before you sign a contract, but there's no requirement for a lawyer to have looked at these type of contracts. And it's always very much buyer beware. I mean, we had a friend that I think was waiting 5 to 7 years, put a deposit down, and literally 7 years later, I think finally moved into the apartment. So it's, it does kind of sound kind of normal. It wasn't a timeshare, normal for what's a fairly unregulated part of the market.
Chris Bates over in our property podcast always talks about scarcity. You want to buy properties that are scarce assets already built, not things that are going to be built in an area that promises to have a lot of houses. It's not dodgy on face value. It could be, but it doesn't sound that dodgy. It just sounds like what is unfortunately commonplace.
It could be the way that it's sold, as in like the language and the kind of sales process. That's where it can feel aggressive. Probably similar to, there's just a lot of things that you buy in this world, and there's quite aggressive sales tactics.
Like best goat's cheese. Yeah. Jules writes in, second time on the show in 2 weeks, Jules. Repeat offender is what we call you. Says, hey, thank you so much for the shout out. Just reaching out to see how I go about getting the course and free book. You just email us, Jules. On any of the Rask websites, you can head down in the bottom right-hand corner there, and there's a little instant support widget. And don't worry, it's not some AI thing yet. But it is actual humans
chatbot
that respond to you there. So our team responds to you if you use that instant support widget. If you have any account issues, if you need to get a free course, just write into us and say, hi, my name's Jules, and I've been on the show twice. What do I get? And then we flick a message to Drew here, and Drew sends you some merch, book, all expenses paid trip to New York.
Maybe a mug.
A mug.
Yeah, candle. Moisturizer.
All Waddle Partners branded.
Yeah.
Good question, Jules.
Trying to do a deal with ESOP. That'd be nice.
Oh, he's wearing Road and Gun today, folks, as well, for everyone that's not watching. Right, Drew, we probably have time for a couple more questions. Why don't we go with...
Bondi?
Bondi, this is a good question because I think this person's confused about what we actually talk about. No, it's a very common mistake. It's a very common mistake. So Bondi writes in and says, which is a good play on words, actually. This is the best question and name of the week. Bondi? Goldeneye? Bonds?
Bondi Beach?
Bondi Beach. This is a really good one. They write in and say, simple question, but there's layers to this. How come certain bonds allow the growth to be taken after 10 years tax-free? What are they doing here, Drew?
I mean, it's not actually tax-free. They're actually called tax-paid investments. Bonds and all the earnings and growth within your bond, realised growth, are taxed at the company tax rate.
You need to explain what type of bond that we're talking about.
Investment bonds.
Investment
bonds.
So this is the key thing. There are
education
investment bonds, but then there are bonds that you can invest in.
Yes.
So they're two different
myself
things.
there too.
So
this is all right.
So there are bonds, like government bonds, that you invest in.
You buy the bond, you get an interest payment out of it.
Yeah.
And there are investment bonds, which are structures. Essentially like a company or a corporate structure where your investment within that bond structure is taxed. So it's actually tax paid at the end of it. Whereas in a government bond, you pay tax on the income that is paid by that bond to you. So they're tax paid entities versus getting a capital gains tax free investment at the end.
So government bonds, not the same. Government bonds are the things that pay you like 3 or 4% a year in income and maybe like, an average return of 5 to 6% over the long term.
Exactly.
Insurance bonds, aka investment bonds, aka education bonds, they're all in the same group of things that are what we think of them not as an investment themselves, but as a structure.
Yeah.
So the money goes in, it sits inside that, circles around and around and around and around for 10 years, paying tax in that 10 years. And after the 10th year, you can withdraw the money, and that's where the tax benefits really kick in.
Yeah.
Key thing to note, though, is that they are not all created equal. There are fees. These are getting extremely popular since the changes have come into superannuation. Good news. Got Grant Hackett coming on the show.
Oh, excellent. Yeah. Well done.
Yeah, so he will also be sitting in that seat.
And a bigger chair.
He's a big boy. Yeah, I think. Just based on his swimming history, he
giant
looks like
hands. Yep.
Is he? Right.
Yeah.
Okay. Yeah. No worries, Grant. Drew's paid to say that. No, but seriously, so Grant's coming in. He's the CEO of Generation Life. Yep. ASX listed. Do you know that thing's performed so well?
He also owns Lonsec.
Lonsec. Yep. I was looking at this thing.
It's GDG, Generation Development Group. I mean, it's the thing that Generation Life's done.
It used to be called Austock, I think.
They've actually helped grow the sector, not just their own business and product. Like they've done so much. Grant Hackett's massive on this, and something we're both kind of committed to is improving education. So getting out there and explaining what investment bonds are, when they suit, what they're suitable for, and rather than just distributing the product and promising returns, it's more about educating the community and building knowledge that then results in demand or the growth of the sector. It's done well.
Did you know? So I'm looking at the chart here, Drew, and we'll just explain what we're seeing.
17 cents.
It was 17 cents a share in 2013. So 10 years ago.
Was it a different business back then?
It was Oz stock.
Yeah.
And then now it's $3.44 and pays a dividend, right? Crazy thing, I was researching insurance/investment bonds at that time, and a guy named Doug, shout out to Doug, who was helping me understand these things at the time. He was like, I'm buying shares in this thing because at that time, you could buy
assets under management.
You could buy this company, and it was some sort of tax thing where if it was under $50 million investment fund, there was something like where it was like tax deferred or tax, like you didn't have to pay tax on it. And so if you had held that company since 2013, not only has it gone up like heaps, it's also paid dividends, and it may also have been a tax-free investment for some people.
Yeah.
Wild.
Oh, because it's a mutual or something?
Yeah, remember at the time the government was trying to do these innovation fund type things where you could have set up a vehicle that creates something, and if you were invested in it under a certain, I think it was 50 mil in total, you could actually hold it and you wouldn't pay tax. I think that was the gist. But yeah, Grant Hackett's coming up. And investment bonds are not the same as government bonds.
No, different. One provides income, one's a tax-paid entity. One's great for higher income earners and those looking to fund education at some point. The other one's great for anyone looking for lower risk income.
Okay. Final question on this before you give us your dad joke. If you had 100 clients walk through the Waddle Partners door, right? Like they open it and then they walk through it, I should say. Out of 100, how many of those would be asking about investment bonds?
I reckon like a third.
Oh, really?
Yeah. It's pretty. I have questions about whether they're, I'd probably put annuities in that story as well. So different products, but these kind of consistent for annuities on the other hand are income sources. Maybe I shouldn't. But up to a third. And a lot of the time it's because they have children or grandchildren and they think about investing in that structure for them.
Yeah, okay. That's a lot more than I thought. I'm actually catching up with Challenger tomorrow.
Oh.
Talking about
annuities.
For the retirement podcast.
Beautiful.
A bit of a cameo over on the Australian Retirement Podcast. Shout out to the Australian Retirement Podcast. Drew and James are over there are crushing it. Buttering his bread a bit here.
Credit to me.
But you are. Credit to you, son. You guys are doing it right.
The zeitgeist.
Zeitgeist. Yeah, zeitgeist.
But we love it.
Yes.
It's literally our bread and butter, and we like talking. I mean, maybe that says a lot about us that we like talking about retirement every day. But there just seems to be, and that's clearly what's happening. There's just a lack of dedicated resource to that. Yeah. So YouTube apparently is going quite well, and we're starting to get heaps of engagement and questions coming through. We're excited to pivot it to more of the 2 cents, not quite the 2 cent style, but
not this laid back.
A bit more Q&A, or like me and James are talking about, we could literally have a single question from an anonymous client that we can work through over 35 minutes.
Yeah.
And from 2 different perspectives.
And they are slightly shorter episodes on average than these ones, so not nearly as good. But we won't hold that against them too much. So I got their analytics right here in front of me, Drew. So the video that went live, I don't know when it was. It wasn't that long ago. It's already had nearly 700 hours watched, which is incredible that's a lot of viewing.
It was a 30-minute video.
I think so. Yeah. So normally most people drop off, but that's really well done. Really, really incredible. So if you're approaching retirement, even if you're thinking about retirement's on the horizon, go over and check out the Australian Retirement Podcast.
Questions you want answered, send them through.
Yeah. And it's the same way you ask a question for this podcast, the same way you ask a question on the live show, the same way you ask a question on the business podcast. It's all the same thing. So you just go into that same form. Yeah, Drew, that's big. So well done. So I've already suggested that my favorite name for this week was Bondi. I just like that. There were so many good ones though. Honestly, if you wrote a question in this week, you get a free course. Send us your deets and we'll send you a book as well. We did get there are a lot of questions that we haven't got to. There's questions from Roger Federer. He writes in from Switzerland and talks about something. Nana got my book value. Wolfie 101, I actually love that question from Wolfie, so maybe we'll answer that next week. But there's Trumpy, a lot of people writing in with really creative names. We love it. So please keep them coming. Absolutely love it. In the next week, just a quick shout out. Then the next week, you're going to see some massive changes to the way Rask looks and feels. It's still us. Everything's safe. Everything's been done. It's just the skin that's going over the top of the brand. You will see that change. Not now, but you'll see it in about 7 days' time rolling off. So I'm super excited. First big change we've had since 2019. That's 5 years. So I'm super excited about that. Drew, it's always a pleasure to talk a little bit of nonsense, but also a little bit of insightful information this week. So really appreciate you venturing down, mate.
My pleasure. And I've got a little dad joke to finish off.
Do it.
It's going to be a nice sharp one. Stop looking for the perfect match. Use a lighter.
Mate, absolute pleasure.
It's good to see you.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.